Hey guys, in this video we're going to be talking about when to take a buy and when to take a sell in the forex market. So let's get it. In the forex market, there are four main things to think about when taking a trade. First off is market structure. Market structure is the most important thing to think about when taking a trade. Are you in an uptrend? Are you in a downtrend? So you have to decide. Then number two, you have to think about supply, demand, resistance, and support. Those are four. Well, still number two, or still mean technically the same thing. And number three, you have to think about do you have like a trend line? Do you have like a moving average? Like maybe fib level that you can use, and just like an area of confluence, in my own opinion. Then the fourth thing, which is one of the most important things, is your candlestick patterns. Like they tell you when to take a buy. Like, do you have a bullish engulfing? Do you have like a variation pattern? Because most times, like I see a lot of people there like trying to like stress all these evening star, morning star, grave world. I don't know what's going on, but at the same time, I just try to break it down into like some easy patterns that I can always remember and recall, so I don't get a lot of like patterns in my head. And yeah, I take my buys, I take my sells, and it plays out. So in this video, I'll be teaching you guys how to know when to take a buy and when to take a sell in the forex market. So here we have the illustration I'm about to make of when to take a buy and when to take a sell in an uptrend and a downtrend. So this is an uptrend. And this is a downtrend. Sorry about the drawing, not the best, but you get my points. And there was a break of market structure here. So in an uptrend, you want to take your buys over here, which I'll change the color. It's probably like red, so you can get it. So you want to take your buys over here. So take your buys over here and over here. So you take your buys at the higher low. This is a higher low. Wow. Take your buys here. So once it gets broken, you stop taking buys over here. Then these are lower highs. That's where you're looking to take your sells every single time, because it gives you the least risk. And risk management is one of the biggest things. This is a lower high. This is a lower high. So you're looking to take your sells over there. So I'll probably put that like blue. Sells, you can take your sells here. So this seems basic, but it's very important. In this next step, I'll be breaking down what I just said in previous part in an actual chart, and that would be gold, which is XAU USD. So over here we have a clean chart of gold on the daily time frame. So what you want to do is always start from do a top-down analysis of any pair you're trading. So first off, I will start on the monthly, and as you can see, gold has been rallying up for like the longest of times. Literally, gold is always going up, literally always going up. So first off, you don't want to over focus on the big time frames, but at the same time you always want to we want to see what's going on the monthly time frame, the weekly time frame, and the daily time frame to get an overall confirmation and know what you're doing. So the next step we'll take is going to the weekly time frame, and what we see is currently gold is at an area of resistance, which is here. And this is what I was speaking about, an area of support, resistance, supply or demand, anyone you want to call it, but they are all the same, to be honest. So this is what you can see, and it had a big rejection here. It had a big rejection. Now your candlestick pattern comes in. You're seeing an area of confluence. Goes in an uptrend, but it got to an area of resistance. So now your candlestick pattern plays a big role. And what are you looking for? You're looking for candles like this that have rejections, which these kind of candles indicate reversals. Yes, this is a big time frame candlestick, but at the same time, it shows, oh, this can go down. This candle started all the way from here. It started like all the way, I think that was from here, that's the opening. got all the way here and came back down here. So it's like you definitely know that sellers are there to stay for a while, and this is the weekly time frame. So it holds a lot of volume, and it holds a lot of power. So you go down to the daily time frame. Well, as you can also see, which we can also refine the zones. Like this zone on the weekly time frame is about, use your pip calculator and you find out that this is about like I think that's like 4,000 pips, which is a lot. So you go down to the daily time frame to refine your zones, and you go down to daily time frame. You go here, you zoom out. Always try to like get a big screen, like so I can see from the starting of the chart to like the ending of the chart, at least to a certain extent. Then you zoom out and take your zones from here. Use like the average of the weeks, or you can use the entire week. Depends. So you just have to try out and find what works. So this is it, and I always put my daily time frame in red because it helps it helps you keep track of everything. Then my weekly time frame zone is, I have like a template for my weekly time frame zone. It's like purple. Then I go down to my daily time frame, which is like red, but I won't let this show on the daily time frame, so I'll hide that. So that's like red. Then I also have like a 4-hour zone. So let's say if I want to like use the 4-hour zone, so this, it's like, let's say it's like green. So it helps you, like color coding also helps you so much. So over here you can see that even if we got rejected on this zone, that's like the red zone, we got a rejection here, you can still see that. Sorry about the noise. Currently in my accommodation, you can still see that we have like the market structure over here still indicating that we are in an uptrend currently. So you have a push, a retracement, a push, a retracement, a push, and now we can see gold coming back here or stopping somewhere like here, then to get a push up and continue going to the upside. That is my own analysis, and that's my own bias on gold, and that's what I'll be looking for also. I don't really trade gold so much. I mostly focus on Nasdaq and GBP which are my best pairs. But at the same time, I always watch gold, watch US 30, and so on to the next analysis. Next one is having one or two indicators. So the only indicator I use is the 66 moving average black. This helps me to just like see when I see the scoop, like, because I know it sounds weird, but like when you see something like this indicates, oh, there might be a sell, there might be a buy, especially when you see that with like a level of resistance or a level of support. It really helps, because over here we had, if you drag out this zone, so we had this and we had this. What does that tell you? Take a sell. So that's just what I do. I don't really try to overcomplicate my trading. I always try to keep it simple, clean, and very precise. So do this, change it to the daily zone, because all these are based on the daily time frame. So what do you see? Oh, could it be a trend line? Who knows? So we'll just try every single thing out. You don't really want to overthink, just test it out and see how it goes. First, if you're not flowing with it, then you delete it. So this is it. So what are we gonna be waiting for? Like 3 touches. So in a trend line, you should have touch 1, touch 2, and touch 3. That's the game plan. So we have this, the touch 1, touch 2, and what, touch 3, which is what we're gonna be looking for around this area. So to probably take a sell, to take a buy, to take a buy, take a long position. Then stop loss should be like below here, and targets, you can first target here, and probably when it breaks above, so you will not be caught up in any rejections or weeks, or be in one trade for weeks and weeks and weeks and weeks and weeks. So when it breaks above here, when it breaks above here, gives a retest, then you take your buys above this level and you keep on going on to the next level. And that, I feel like that's like the best way to trade. You have to be a dynamic trader, not just being focused on, oh, you just take a buy and you hold it. Sometimes you take a buy and hold it. You might not be wrong, but it might take so much time to play out and you just get bored, and who knows, you might not be psychologically set to hold the trade and maintain the trade, and who knows, you might end up closing a loss. I know it happens to me sometimes, and it happens to a lot of people. So at the same time, you have to be ready for the trials and tribulations that come with trading, and especially when it comes to swing trading, because swing trading is mostly about the mindset. So the candlesticks that I look for mostly to enter a trade are mainly rejection candles, like the pin bar candlestick and the bearish engulfing candlestick, bearish or bullish engulfing candlestick, or the pin bar. So an example of that would be areas like this. First, you had your moving average here. You had this is your moving average. You had your pin bar, a reversal candlestick pattern. Then you had your bearish engulfing also going below this, going below this, and boom, from here, once this candle closes, you are set to take a sell. This is literally the perfect example to take a sell down, stop loss above. I don't use the daily time frame for my entries, but this is a perfect example because the candlestick pattern is still a candlestick pattern no matter the time frame. So that's just one thing that people don't really understand. No matter the time frame, a candlestick pattern is always a candlestick pattern, no matter like the time frame. Yes, some are just way bigger, but at the same time, it's still a candlestick pattern. So over here, even if you're trying to take a sell due to this candlestick, because of this candlestick, because of that engulfing, once you had seen this candle over here, this pin bar, it literally says this is going down. It literally says this is going down. This candle is going down, but this candle is against it. So over there, you should contemplate: should I keep on holding these buys, or should I keep on holding these sells or not? It tells you literally, okay, you can cut your losses short, you can take a chill pill, you can relax. There are things to do beyond the chart. And also over here, candlesticks like this, these are the kind of candlesticks I look for. Then you had this candle plus this engulfing the next day, then definitely that's like a sell, because your overall bias should have been a sell. You rejected from a major zone, and this, if you say this is not a major zone, just drag it out, drag it back. This is gold's all-time high for a real minute. This has been the all-time high of gold for the longest time. So it has had literally 3 rejections here, here, and it's now here again. So even if this trend line breaks, the market structure has not changed, but until it breaks here, once it breaks here, I know it takes some time, but like, patience is key, bro. Patience is key. Patience is everything, honestly. Patience will save you a lot of money. So once it breaks here, you know that gold is going down for a real minute. It is going down for a real minute. So yeah, with that being said, probably this is like everything I use. And the last one also is like the fee. It shows me when to take profits and when to cut my losses short to a certain extent, but mainly I use it for take profits. So I mainly use the level of 23.6. 23.6 is when I have 22.6, those are areas of continuation. I don't use it as a fib level. So here, this was the 23.6 because we broke out from here. There was a break of market structure here, which broke above. This candlestick broke above. This candlestick broke above. So that broke and changed the entire market structure of gold. So this got to a level of 23.6 and it continued, but this is not a level of, it's not a true level. So basically it's just like a minor structure. I don't really take it serious. If it gets broken, fine, cool, but my entire bias doesn't change. So what do? You drag it from here to here, from here to here, 23.6, above 23.6. Then to here, this was the first 38.2. And then it kind of makes your work look clumsy, but at the same time it works. This was the first 38.2 at an area of rejection with your moving average. There are rejections here to a certain extent, but this with a W pattern also, and boom, you are in, and you are in to get to your negative 27. So to look something like this from here, stop loss below here, and your take profit above here. With that being said, guys, I'll see you guys in the next video. If you got some value from this, drop a like, drop a comment, drop a sub. I'll catch you guys later. Peace.